7, 8, boom, 11, 20 now. We are ranging around 20, from 15 to 20 every day. But the point of us doing all of this is to change the narrative, to change the way Ugandans have to look at the financial markets. It's very crazy. So you have to understand that that is one of the reasons why we started, to solve the problem of misinformation, to solve the problem of what? Poor information sharing. To solve all these, then what happens? Fast forward, I'm coming to the point why we are doing these lessons every day consecutively. The reason why we are doing it like this is simply because we truly know that however much we want to help you guys, we are not going to be here forever. No. Do you think we are going to teach you guys forever for the whole year, like every day? No, we are not going to be here. We are not going to be here. And yet, simply, you guys need this information. I'm not going to lie. Even though it was me in your step, I literally need this information. I literally need it, because no one is going to give you this information for free, I swear. You can find it on YouTube, but a person to be there with you, to pass through, like, I've been there those 2 years, like, man, like, you're there hustling, nobody's there with you, nobody's there to help you, you don't even have a community. But then here you are, you have a community, you can share a setup, we talk about the setup. If you've not understood the fair value gap, you could text us, we talk about the fair value gap. But for sure, there's nobody that is going to pull off these moves for free. I guarantee you. Nobody. And now, we are doing this every day because simply there's going to reach a time whereby we can no longer do this. And the time is coming for sure. I'm telling you guys, it is going to come whereby we are no longer going to have sessions like every day. Why? Because there is time for everything. If you go and check my status today, like I posted, there's a scripture which is Ecclesiastes chapter 3 verse 1 that states, under the heavens there is time for everything. There is time for everything. There's time to cry, there's time to get excited. There's time to harvest, there's time to seed, to plant. There's time for everything. So there's time for us to teach you guys these things. And this is the time. That is why when the time is right, everything shall be right. That is why we pull up every day, show up every day. That is why I do not know. There's some guy that texted in the group and was like, are you going to have lessons today? I just laughed it off. And I was like, you guys, don't you see that we show up every day? Doesn't it stick in your head that we show? We always have to be there every day. If I told you I've reached, it's now 1 month and 1 week. The reason I'm counting 1 month and 1 week because that's when we started. Unless for you have just come late, you've just joined us late. But we still welcome you. You're not late. You're still early. But then you have to understand that for us, we pull up every day. If I do not pull up every day, if I do not show up, Willie will show up. Cypher will show up. We shall always leave someone to delegate. We shall always delegate someone, rather, for the lessons. But then we shall always be in the background. We shall always know what they've taught. And all of that means that we've showed up every single day. Every single day. Now, you have to understand this and put it behind your mind that whichever thing we talk about, if we talk about inefficiencies, fair value gaps, and you do not take notes, and you do not take anything, simply because maybe you're at work, simply because you're traveling. Okay, fine, you're traveling, you can't make notes when you're traveling. But reach home and take notes, make notes. Why are we emphasizing you guys taking notes? It's because there's going to reach time and we are not going to be there. And what is going to be left is those notes that you've taken. I swear, those notes that you've taken are the ones that are going to be there. It is because when you take notes, you master them more. when we give you guys assignments, few people submitting their work, few people go back and check these things. But then there's a group of people that just comes here and just sits, you listen to whatever that is said, you do not even go and look for these things. You see, I know I may be rough, today I may be rough, but there's no point of me being rough or rather there's no point of me being easy on you guys, when simply I know if at all tomorrow you start trading and these concepts do not work, you may start saying that, okay, Alvin's concepts do not work, Willie's concepts do not work, maybe Cypher's concepts do not work. But then simply the problem is not with us, the problem is with you. Simply because you never took notes, you never backtested, you never showed up every day to look at the charts. You understand? You have to understand all this. There's a reason why we are doing all of this, showing up every day for you guys. And one of the major reasons is because we know that we can't be doing this from the beginning of the year to the end of the year. No, for sure, it can't happen. So you have to understand, if at all God has made this time, that is why whenever we are starting the sessions, we start by praying. And when we start by praying, we start by thanking God for life. The reason why we thank God for life is simply because, man, there's a possibility. Remember, I told you guys we're in a game of probabilities. Even you being alive today was a probability. Why? There are two things that can happen. You can die or you can live. Everything is probability. So you have to understand that. You have to understand that even having these lessons is a probability, because there's a probability of us not having these sessions, or there was even a probability of us not starting these sessions completely. 100% there was that probability. But then what happened? We chose ourselves and we're like, we are going to show up every day. And if we've decided to do something, we're going to deliver 100%. We are teaching you guys the same way the people that have paid us to teach them. It's just the same, man. It's the same energy, the same vibe. It is just because you guys are too many and we can't call you guys, but then we are going to call you. We are going to call you, each and everybody, to figure out how you guys are doing. And I told you guys at the end of these sessions, we are going to have a meetup. We are going to meet somewhere so that we interact, we get to know each other, so that you guys show us how far you've gone, how is your journey. And we are doing all of this. You're not paying us, you're not doing anything, but it's just out of love, out of that place in our hearts, that place in us, that you know what, if we do not do this, there's someone outside there that is going to mess. There's someone outside there that is going to mess with what? With wrong information. Because a lot of weird traders, you see, there's one point in Uganda, everybody is almost a mentor. Simply because they have traded for 1 year, simply because they have traded for 2 years with wrong information, they think that they can come and just teach you how to use trend lines. I told you guys that, do you think banks use trend lines to trade? No, and no, and no, and no, and no. Now, why do you want to be using trend lines? I'm summarizing in 7 minutes, I send it to Will. So you have to understand all of this, and you have to understand the place where we are coming from, to put in all this pressure, to put in all this work. And then it goes back to what I said. Sorry. I be here always talking about mindset, psychology, but today I've seen truly that some people, even though we talk about mindset, even though we talk about psychology, they do not put these things in place. I told you very well, I'm not going to come to your home and teach you how to be patient. I'm not going to come to your home to teach you risk management. I'm not going to come to your home to teach you mindset. I'm not going to come to your home to teach you what? Psychology. These things, we can only talk about them. It is not like the same way we're going to teach you fair value gaps. No. We can teach you fair value gaps, we can teach you order blocks, but we can't teach you psychology. Like psychology, it is something we can only talk about. We can raise awareness on it. Mindset, we can only raise awareness on mindset. But I can't come to you and say, you know what, I want to teach you mindset. This is the 1% mindset. The 1% mindset in trading is that you have to know there are two things that can happen. We can either lose money or make money. It's a probabilities game. So what does it mean? It means that you do not have to risk all your account on one trade setup. Why? Because you can lose all the money or make a lot of money. But then it would be nice if you make a lot of money. But it would be bad and painful if you lose your money simply because you risked all your account. I'm not going to come to teach you that. We can only talk about it. I'm not going to come to show you how to do that. There's no way on earth I'm going to come to teach you how to do that. So it has to be inside your head. That is why whichever topics that they teach, be it the human behaviors, I talked about these human behaviors, psychology, mindset, and we always talk about mindset and psychology and motivation on the weekends. Take notes, just take notes. Take notes, I swear. At least when you make a loss, go back and sit down, read those notes, figure out, okay, these are notes on mindset. Alvin talked about mindset, Alvin talked about psychology. This is the psychology I was supposed to have, but then I never had this. It's the mindset. We are talking about all of this because we've gone through it. I swear, we've gone through it. I'm not talking because I'm perfect. No, there was a point whereby I blew my account. There was that point whereby you deposit money today, you blow it today. You deposit tomorrow, you blow it that very day. You deposit money on Monday, by Friday you do not have your account can't reach Friday for some reason. And I know there are some people that are under that state. You're under that, but it is simply because you're not understood, you're not paying attention, you're not intentional in whatever we are saying. You see, there's a tendency with Africans, whenever something is free, people do not pay attention. If we come and we say, man, you know what? There's a course, it is for free, people are not going to pay attention. But you tell someone that, you know what, this course is $100. $100, and if they pay the $100, they are going to pay attention. They are going to pay attention simply because they paid money. But for things that an African has not paid money for, they are not going to pay attention. That is why you can see the group top tier is having 150 members, but then 14 members or 15 or 20 max are the ones that attend the lectures. 20, I swear. There has never been a day where we've had 50. Not even a quarter of the population in the group. What does that show you? It shows you simply because the mentorship is for free. So, man, even though I do not attend today, man, my vibe, man, I'm not feeling it, man. I can't attend today. I'm busy. There's a party. Okay, fine, there's a party. Go and enjoy. Come back. Tell me you never attended the lectures simply because you had a party. Then after the party, you tell me that, okay, I had the party, I never attended the lectures. What did you teach? Then I'll tell you what we taught, and if we recorded the video on YouTube, I send you the link. In that way, you've not missed the lecture. But still, a person won't attend the lectures. They won't tell you. They won't. Man, there's no way you can help them. And then what happens? Today we had what? We had a live trading session. Some people went full margin, and simply because maybe they may not have attended the mindset lectures, they may not have taken notes on the mindset, boom, their accounts went. Now, do you see how everything plays? Everything comes in. One simple mistake leads to another. Slowly by slowly, if you continue like this, there's no way you're going to make it outside here in the streets of trading. No, it's going to be a lie. You have to be intentional. You have to be intentional. 100%. So it brings me to a point whereby I need you guys. I'm on my knees. I need you guys to take notes, to pay attention, to be intentional, to put in the time, back test, change your mindset, correct your psychology, to know that you're in a game of probabilities. You're in a game whereby there are people that have studied these financial markets. They have degrees and you're competing against them. There is no way you're going to come with a zero mindset, with a rugged psychology, with an unintentional mind, and you think you're going to make it outside here. I swear you're not. You're going to gamble. You will make money today simply because it was a lucky day. Then you continue with your losing streak, and you're losing because you do not know why you lost. Today we made the trade. We made our analysis very well. You guys enjoyed. What happened? We entered the trade. It went to profit. Everybody was happy. But then there's those guys that entered full margin. What happened? They could not even close their trades. And boom, their accounts went. That is why you could see that from you see when the thingy was in profit, when the trade was in profit, were around 20 people. Everybody was happy. The group was on fire. Vibe, yeah. What? It's pumping, yeah. Then after some few minutes, people started disappearing. We ended up remaining like 6 people, 7. From 20, we remained 7. Now that shows me clearly. I'm not there. I wasn't there. I never saw you guys, but that shows me that your mindset, your psychology is not on point. Now, that is why I've spent 1 hour talking about that, so that at least you guys should know, literally, that you have to be intentional. You have to know that today's loss does not guarantee another trade's the way another trade is going to play out. It cannot guarantee tomorrow. You have to know that you have to pick one stone every day from the beginning of the year to the end to have 365 stones, not to collect all the 365 stones in one day. It can't happen. So consistency, showing up every day, pulling off those small wins, that is what counts. Not coming up today and you just risk all your account. No, it doesn't work like that. So with this, I hope you guys have understood. Thumbs up if you've enjoyed this session. Before I take it back to Willie, thumbs up if you've picked something. Yes, I like that. So at this juncture, I want to shift the presentation to Mr. Willie to take us through today's presentation.
Thank you, Alvin. I hope everyone is doing good. Hope you had a wonderful day. So without wasting any more time, I'm going to switch from trading view back to the notes. People don't mind the chart and the analysis. It's all part of the game. So let's first pull back to what we had to cover. So unfortunately, yesterday we were interrupted with power, but we'll continue. How do I do that? I hope you people are picking something, and I hope you can see this. I hope Nasdaq is in a rush to reprice lower back into this, into that order block. Last week is what? The week's opening. Wait until it's 13. Sorry, it's 3:30 or something. Anyway, I hope this is clear. So we're still talking about two things, and I think these notes will cover the whole of this week. Next week, either Friday or next week, we'll begin on the real work. Now, going into the charts, making analysis, stuff like that. Okay, so we're still talking about the fair value gap. How is fair value provided, stuff like that. So yesterday we saw how a fair value gap is formulated. I hope you all remember this. I'm not going to repeat this. I hope this is still clear to you how fair value gaps are formulated. This is the basics. If you don't know this, please do your homework. So we saw a BC, we said a BC is a buy side imbalance to the buyers, to the buy side of the market, and it makes it a sell side inefficient. So we expect price to come back to such levels to reprice, sorry, to reprice lower to such levels. So if we are in a bearish movement, if we are in a bearish movement, we expect price, sorry, if we see such a gap that is formulated by 3 candles, this is whereby you see price hurrying it's rushing down, it's quickly rushing to a certain level, and then it skips, it leaves gaps like so. So it's in a hurry to maybe to reach a certain key level before a new time cycle pops in, and then it leaves such gaps. So if it's on a downward movement, we call these gaps BC. Sorry, CB, sell side imbalance, buy side inefficient. So it's an inefficient to the buy side. So in other words, we are saying only sell side was offered. So what are we expecting is for price to come back sometime in the future to revisit such levels, to offer fair value. In other words, the algorithm works this way, just to provide, to maintain the 50-50 what balance in the marketplace towards the buyers and the sellers. That's why you will see most cases price will run down, and then maybe in the evening or next week or next year it recovers that entire gap. So that entire gap is normally, it's like the dealing range, whatever you call it. So we saw this before power went off yesterday. We saw how prices re-delivered to such key levels, to such imbalances. We also saw whereby we see another candle almost covering the entire gap, and then retracing slightly to that gap and then kicking off. So we consider that such a gap balanced. If you didn't get this clear, I'm not going to again waste a lot of time here, because we have something that we need to tap on. Now we also talked about support and resistance. How do fair value gaps, how do we bisect the fair value gap? And we're going to keep this knowledge, the same knowledge, and carry it on towards other analysis. People who are in the group in the morning, there is a trade I do, but following the same analogy of premium and discount. If you recall those screenshots, let me see if I can go to top tier and revisit. But if you are around that time, you saw the what? The dealing range. Let me switch. This same analogy of premium discount, you bisect the gap into a premium level and a discount level. So if you expect price to continue dropping, you want to see the market repricing back to the discount level, to the lower quadrant, to the lower quadrant, and then tapping only that and then continuing down. If you want price to continue up, you want to see another candle coming back, purging here, like crossing as if it is going back up, and then like covering the entire fair value gap. And then you bisect that fair value gap. Now it becomes an inverted fair value gap. Now what do you want to see if really price is going to use this as support to continue up? You want to see a drop Another candle coming back, visiting which level, which quadrant, the top quadrant, the upper quadrant, and then kicking off, shooting up. You get. So in other words, the premium, we want to see the premium level or quadrant acting as support to support market to continue upwards. On the other hand, we want to see price use the discount level to as resistance to continue shooting lower if at all we are in a bearish market. Now the middle range is what we call the mean threshold or the consequent encroachment or equilibrium level or the 50%. You get. So these names shouldn't confuse you. You're free to use them. There are people who use them very well, but you don't mind about the names, the terminologies. You just know that that is the 50% of that one, and the 50% is the midpoint. So in most cases, in some cases, price will come back to such levels and then continue in a different direction. So we looked at volume imbalances, and we say these ones occur in two ways. This is also a fair value gap, but it's slightly different. It's formulated by two candles. How? Whenever you see a candle and a candle and the bodies are not in close proximity, by close proximity, this is what I mean. You're seeing these candles here, the three candles. The black, the green, the black, the black. The green one is the up close candle because it has to be repricing higher. The black ones are those ones that are dipping and that are dropping. So now you see the bodies, almost the bodies are sitting on top of each other. That is what we mean by close proximity, like bodies are covering up, there are no spaces. But whenever you see a space like so, whereby a body of one candle and a body of the second candle, they are far away, they are at a distance. And the wicks of these bodies are almost kissing each other, like are overlapping. I've dropped into that space. We call that a volume imbalance. So now in this example AUC, you can notice how bodies are really far away from each other, leaving wicks to overlap each other. That gap qualifies to be called a volume imbalance. Now, in example B, which is slightly, let me zoom in a little bit here. In example B, you will see the top candle. The top candle here, the green candle that is on the top level, has no wick below. There is no wick at all. The body is flat. And then the second candle, the first candle down below, has a wick that peeps into this gap. So that one also qualifies to be called a volume imbalance. Then let's go to the second example, a gap or a void. A gap occurs when there is an area of price that was void. There is no transaction that happened. That is an example that I will tell you. Yesterday I gave an example of people trying to meet and you be like, let's meet in the market at such and such a time and we do a transaction. And you don't show up. Someone has showed up, but for you don't show up. Be like, hey man, I was waiting for you, you didn't come. So we postpone the meeting, maybe in the evening. We meet in the evening. No, maybe I will come to your place. Now, these are the gaps. This is the void that I'm talking about. Nothing crossed into that time. But the time kept on moving forward. Because time, you cannot stop time. Time will not wait for you. So, however much you agree to meet at a certain time at a certain place, that time reached, but you didn't show up. This is the void that we'll see. And I gave you an example of when do we expect such gaps to happen. You see a week has 5 days, 5 trading days, leave alone crypto, but the normal trading of banks, commercial banks, etc., and institutions. So it's from Monday to Friday. Now we have the 2 days of Saturday and Sunday. What do you think happens on those 2 days? Time continues. Time continues. Only, but remember we said at the beginning we have two variables that are supposed to be input into a machine. Now, during the weekend, the Sunday and Saturday and Sunday, only one variable is still in the machine. Which variable? Time. So time continues rolling, but no price, no transaction. People are at home, the banks are closed, no transaction is taking place. Now, when a new week starts, Sunday, like Sunday midnight, that is the midnight opening of Monday, you will see a skip, you will see such gaps, you will see a big jump, but time will be skipping time. Then the transaction again, sorry, the trading or the exchange begins again on Monday, midnight open. So you will notice such gaps being left. No wicks, no what, just bodies and a big space. So we call those voids. Or a void, people, is like space, empty space. If you did some IT, if you know something, like this is a common term. So let's continue. This is a repetition, but that is a gap imbalance. So what do? You bring your lines. You can use lines or boxes or rectangles to mark such levels. Why do we have to mark these levels? Actually, why are we even here? Why are we going through all this? These levels, we are marking these levels, or we are reading about these levels because price has to come back and revisit these levels, and we know why. If you were here in the beginning lectures, you know why. There are two points that price will reprice to, or that will target. These volume imbalances, the gaps, the fair value gaps, etc. All those are gaps. If not that, the key highs and key lows, like higher high, lower low, etc. Those ones. Those are the only two things you expect. So you will know where to put your stop loss, you know where to put your TP, things like that. You know which liquidity to attack, stuff like that. Only two things. That's what you need to put into your mind. Okay, the three candle pattern, the swing. Now there's a lecture before we started this bootcamp that when I talked about these swing high, swing lows, like intermediate term high, intermediate term lows. I hope some people who attended that you remember. And we saw how it played out, just that we're on a slightly higher time frame. Chris is saying I had given up fair value gaps due to being stopped out. Don't worry. Don't worry, don't worry. It's all going to make sense in the near future. So just know that we have 2 points that price will attack. It may not attack it at that right moment. That's why we say you need to make your analysis. You need to study the market to see what is happening. What you expect might happen tomorrow, might happen next week, you get. And that fair value gap, the 5-minute fair value or 15-minute fair value gap that you marked today, expecting the price to come back to that level. And price does not, it continues down. For example, in the example we saw, as in the chart that the analysis I was doing prior, before we started, as Alvin was presenting, was talking to you guys, you said marked out the 5-minute gap, expecting price at least to come back there, but there is something that I had missed. Let me first take you back. Let me see. Let me go to the 15-minute. Now on the 15-minute, you see that price has a target. This gap, is a gap, kind of a void. This one here. Let me get the other. This one. This is a void that I marked, or was it Sunday? I marked it on Sunday. Sunday, Monday, yeah. Mondays, like that. I marked this level, anticipating price to come back here. This one. So this was the end of last week. How do we know? This is last week's one. Let me put a line. Friday. So Friday 21st, that was last week. We can all see this here. So this is the line, Friday. Let me increase the one, the thickness. That dotted line, that was Friday last week. So the candle that closed. Let me remove this, these markings. So this is a volume imbalance. We're going to see. So that is what I was telling you about, that time does not stop. But the other variable, since it's weekend, so look, before Friday shoot up, the Friday candle, because we're on the 15 minute, this is not 1 hour or 4 hours. This Friday, there is a gap that was left, a fair value gap. We can all see this. Let me increase the thickness. Yeah, that is a fair value gap. But what do we expect is for price to come back in such gaps. But did price come back? No. And then you will cry. Price was in a hurry to go where? Somewhere up there. I'll show you where it went. Now here, the last candle. This was the last candle that happened. Remember the day closes at 16:30 or 45, or by like the closure of the working hours. So that is the candle that formulated. Now that it was end of what? Closure of Friday. Time continued. Let's see. So Saturday happened, nothing. Sunday. Now Sunday, what opens up? Which session starts the day? Which session? The Asian what? The Asian shade session, and it starts at what time? At exactly 1800 hours. Now we can see this candle happened at what? Exactly 1800. So we say the Asian session starts, it's the first one. There's someone who was asking yesterday about this, and people gave him what? Some correction. So Asia starts at 1800 to what? To 2:30, and London kicks off from that exact time. So this line happens at exactly 1800. What is that time? What does that time tell us? That is the opening of Asia. And that happens on Sunday. Like when Sunday closes like this, Monday opens up. Now you see this gap that was left, that is a volume imbalance. So what you do, you come and mark that one, that gap from the week of the previous candle to the week of the candle that started the new week. So this is the candle that started the new week. Now what do you expect? Is for price to come back at that level. So how do we call this? We call it, you know the name now, volume imbalance. So such levels are very key. But why do we lose this? We want the market to do whatever we expect at that time. We want things to happen at that exact moment. No, please. So now I want you to look at this. There is a candle that tapped slightly before the market. There is this candle here that tapped on top of that volume imbalance. This candle here, it tapped slightly and had marked it. So that was the law of Asia. The law of Asia made the law of the week, the start of the week. That line, let me make it red for you. That red line. So you see where it tapped on top of this gap. So that is fair enough for price to continue shooting up. That was a structure shift. Now where did this price go? Let me first switch to daily candles. Let's see why these gaps really matter. So this is a daily chart. A lot of chaos here. Now, these are the things I marked on Monday, and I was sharing with Alvin. This is what I was expecting for price to do. Hey, there's a lot of chaos. Let me first do one. Remove all these. Now I want you to take note of this. Are you seeing?
Let's get another chart.
Yeah, let me get another chart because I don't want to remove my what? US 100. Okay, do I need to? I need to switch the broke. Anyway, I'll remark these levels, no problem. Let me delete. Let me delete them. Let me remove all the drawings. Yes, remove. Okay. So this is a volume imbalance we've marked. This happened on Monday last week. This is the kind of Wednesday. This is, sorry, Monday this week. We've marked that gap. That is a volume imbalance. So price continued. So this is the Monday candle. This one. This is the Monday candle continued up, and then Tuesday also continued up, targeting what? Now, before this happened, these are the gaps we labeled. Just that I've just deleted my markings. Now you see this. This is a volume imbalance that happened some weeks back. You get these ones, this. So you mark. I had marked that one, and after I shared the notes in the group in my notebook. I just took a photo of the notebook. You can go back and revisit that. So now we want to look at time. Just that we haven't started touching time, but let's look. When does this happen? Let me draw a line. When did this gap happen? Friday 7th. I've labeled it. Let me change this from black to red. We saw the market. If still you don't believe that this is not buying and smart selling pressure, this is some mathematics. Now this was last week. Look, last week opening, this was Friday, the kind of Friday. What happened? Saturday happened, nothing. Monday came in. Saturday and Sunday, nothing. Monday came in. Monday continued dropping lower. Last week. So that is a gap you'd mark. Now, Monday this week. This was Monday this week. This one here. Let me also mark down. Monday left this gap, the yellow one. Let me change it maybe to cyan. Yeah, the cyan color or the blue, you can call it blue. That is a void. They left it. Price shot up, attacking what? Attacking what? This void, this volume imbalance of what? Of last week man opening. So you see, this Monday, today's Monday, just closed, sorry, happened to have closed above this. Like it took out last Monday's what? Opening price. Sorry, yeah, opening price and the high of Monday. And again, covered the entire gap, made sure that it covers it before Tuesday came in. Now, when Tuesday came in, it just continued up. Continuing where? Let's see, this is Thursday. So on my markings, I marked Tuesday. Let me see the Tuesday high. This one, I was anticipating price to reach up here to the Tuesday high. Yep. Either the Tuesday high or the 50% of this level. So those levels, let me increase the thickness for you. I was anticipating for Tuesday to kick up and reach this level. Like the high, the opening price of the down close candle of Tuesday. This black candle that dropped was Tuesday 4th, last week. But if we mark this, the entire candle, because it dropped lower, you can see that it almost touched the mean threshold. The 50% what? It stopped where? And then price is reversing. It stopped. If we are to mark this, because now Tuesday last week acts as how do we call it? An order block. So if I were to mark that gap, let me reduce that gap. That will be the discount. Then the top part will be the what? The premium. Let me change the color of that to blue. You can see. So that will be the premium of that Tuesday. This is Tuesday last week. Now yesterday's Tuesday made sure it stopped in the what? In the lower quadrant, in the discount. And we expect whenever we see price kissing there, if we expect price to shoot lower, we don't want to see it crossing into the premium level, the upper quadrant. So premium of Tuesday last week. This one. And then this is the discount. The discount of Tuesday last week. Now what happened of Tuesday? Today's Tuesday, sorry, this week's Tuesday, made sure that it taps that. So we marked from the high of the tip, the high of the last week's Tuesday and the lower point of last week's Tuesday. And what happened to the Tuesday? Made sure that it taps into the last week's what? Lower quadrant. And look at what is happening to Wednesday. Wednesday started from there and it's dropping back where? To this imbalance. You get to this volume imbalance. But I want you to take note of this, that since this is a mechanical stuff, like things are like in a mathematical way. You see at the right time, market will reprice to key levels, but almost at the same time, on the same time that the gap was created last week, and last week at a certain time, and then it is being attacked this week on the same day, like of last week. Like such things, they don't make you wonder and maybe question, and you still think that these are manipulated by buying and selling pressure.
Some people are very clever.
Yes. Do you have questions,
Ivan.
Ivan? Yeah, you can ask.
Right, thank you, bro.
Yes, you're welcome.
I wanted to ask you that I understand why the price is repricing. It's called repricing or redelivering from down
Yeah, it's called that. Yeah.
to cover the first fair value gap. Then I don't know why are we marking this area of the order block? Why are we marking it as premium and discount? Yet there is no fair value gap up there.
Why are we marking the order block, the entire candle, as premium and discount?
As premium and discount.
And now, this is slightly advanced. We haven't gotten to order blocks, but any candle you see, it has time what? Time, like key points. We call them data points, and we mark from the lowest point of that candle to the top point of that candle. But we're going to see all this, just that I couldn't explain this minus mentioning this. You get? So we're supposed to cover order blocks yesterday, but yesterday we were interrupted by power. Even today we're supposed to cover the order blocks. So yeah, that's it. That's why we first want to analyze these things before we go into the markets, because now you see I end up like mentioning stuff that is going to, but it is necessary to know. Yeah. So just that we haven't covered this, so that's why you might have been like confused. But just know that premium and discount, good enough you know this. But now instead of marking the fair value gap, we're marking what? An entire candle. You get? Yeah. So just know all the voids, like the voids, the gaps, the voids, what else? The volume imbalances, all of them are going to be subdivided into two pieces, into a premium and discount level or quadrants. Yeah, so while maintaining that analogy, we're going to carry on to the next sessions.
Then lastly,
yes,
if the order block, I'm assuming the order block was not nearby with it was not near to the volume imbalance here.
Yes.
When these candles are repricing up, can I just put my premium and discount rectangle around the volume imbalance and just use it as the
that is very okay. Now, for example, here you see this price. Today's candle is approaching this volume imbalance, and I will say this is what we expect according to what we've learned. We subdivide this level into into two again. This gap, I'm zooming in. We divide it into two sections, like this. Let me change the color. So the yellow one will be our discount level. The top one will be our what?
Premium level.
Our premium. So if we expect price to continue upwards, what do we want to see? We want to see price coming back here in the top part. not to cross below, not to cross the mean threshold, not the midpoint. That's what we want to see. And we want to see what? Bodies close here. Not wicks. Wicks can do what? This is what we want to see. If that is our black candle, let me change it to black. Yeah, if this is our candle, we want to see, price can play the way it wants, but we want to see something like that. So the wicks can do whatever they want. So we want to see candles, like bodies of candles stopping in this top quadrant, not to cross below here, but the wicks can do what? Can wick into this gap, into the lower quadrant. And then we expect price to continue up delivering upwards. That's what I would anticipate. That's what I would want to see. So if it is violated, no problem. I would just know price maybe is continuing. If price at all violates that, I just know it's now continuing lower. You get maybe to attack what other levels like this gap, the gray area. You get, but this was, to me, it was balanced. You get. So I would want to see this maybe before closure of today or tomorrow happening, and then the price continues shooting upwards the next week. You get. Yeah, so let me go back before we close. I hope you people, you're getting something. Yeah. So QM lost. QM lost. What do you mean lost? Who is lost, Lanai? I got lost when you marked the last week Tuesday. Hey, Chris, do you have a question? But don't worry, we haven't tapped like order blocks, but what I want you to mark, to put into your books, is what we presented, the fair value gaps, stuff like that, and then how to bisect them into premium and discount levels. That is what really matters. Okay, so back here now we have candles that swing. Swinging is like you're on a rope up and down, like a pendulum bob, stuff like that. Now these candles are also formulated by, they have to be three in action. So we have what we call a swing high and a swing low. The names will change, like to intermediate term high, intermediate term low, but they are the same. So how does a swing high happen? When you see a first candle and another up close candle, and then another one drops lower. So you see a candle on the left slightly lower than a candle in the middle, and then a candle on the right hand also lower than a candle in the middle. So that qualifies to be, the candle in the middle qualifies to become a swing high. I repeat this, a swing high is the highest high of three candle patterns, whereby a candle on its left hand side, it's lower, and the candle on the right hand side is also lower than it. So the candle in the middle is like the priest. You get? So we call that a swing high. Now for a swing low, it's just the opposite. It's just the opposite. A swing low to happen, we need to see a candle in the middle being protruding higher, like more lower than the two candles on each side. So we need to see the higher low on the left and a higher low on the right, and then the middle candle like pulling its head out That's how a swing low or swing high is formulated. You get? I hope this is clear, people, of a swing high and a swing low. How they are formulated. Yeah, Omega is saying it's loud and clear. So just know you pair 3 candles and you look at the candle in the middle. Most of this happens when where you see lower lows or higher highs. You see such a candle being higher than the rest you get. So let's continue. So we'll release that knowledge of swing high, swing lows in the near future. So now this is what I'm talking about. This is what happens. AM, the overview value of AM, the accumulation, manipulation, distribution. This is the first thing that I have been introduced to you. Yes.
Please, may I take a screenshot of the previous
slide? Yeah, it's okay. Let me take it back. I think that's fine. You can see it clearly.
Okay, thanks.
Yeah, you're welcome. So for a swing high, also a swing low, let me see. Let me take you back to a chart and we try to see these things. Now we can see this chart. Let me go here. You can see this part where I've marked black, and this is too much black. Here, you can see these 3 candles. Now look at this candle, the gray one, and it's weak. So when you see a first candle here, it's lower than the left candle. The candle on the left is lower than, its high is lower than the candle in the middle. And then the black candle that comes up, it's also lower, its high is lower than the candle in the middle. So the candle in the middle qualifies to be what? A swing high. Just that no complex explanation. That's it. No. So whenever you see that another one is here, another one is here, you can see this candle on the left is lower than the candle in the middle, and then the candle on the right is also lower than the candle in the middle. So this candle in the middle qualifies to be called a swing high. Let's look at a swing low. Now look here. These candles that pushed price upwards. This candle in the middle is slightly dipping. This one, you can see it's weak. Let me mark the weak. Where I've put that red line. That red line, that is its high, and that is its, sorry, this is its low, this is its high. Now the second candle is here, is this one. Let me mark that green. And then another candle is here. So those ones that are marked green, those are the candles on the left and on the right. But the candle in the middle is what I've marked with its high, its lowest point is slightly lower than the candle on the left and on the right. So this candle in the middle is what we call a swing low. Swing low. We'll revisit this knowledge and we'll see why it's important. And when you look on the left where this swing low tapped, here we have a 3 candle pattern. And what's in the middle here? that was left, a gap. And if we bisect that gap into two pieces, the upper quadrant, we said we don't want to see prices to continue upwards. We don't want to see price going back where? Into the lower quadrant. Let me divide this. This is the lower quadrant. This will be our discount. And if price is to continue upward, let me give it a different color. The wick can do whatever it wants. It can even wick into the lower quadrant, but the bodies should not. I repeat, the body should not do what? We don't expect to see bodies cross below the mean threshold. The mean threshold is the middle part. Is the midpoint. That one I've marked red. That red line is the midpoint of these two. Of this fair value gap. Yes.
Excuse me.
Yes.
Sorry for interrupting, but
it's okay.
I have a question. So does this apply to all time frames?
Yeah, all time frames. This is a 1 hour chart, but we can go into lower time frames. Remember what we said on Monday? Was it in the Monday lecture that time is fractal? Whatever you see on the higher time frame, it should be reflected in the lower time frames. You get?
Yeah. So like,
yes.
When you're dividing this, can you use a Fibonacci?
Yeah, a fib. Yeah, I'll show you how we can use a fib to mark these levels.
Okay.
Yeah, don't worry.
Okay.
And all the readings. There is someone who has posed a question in the group. We would be grateful if you provided the PDF. Don't worry, the PDF will be ready when the lecture is done, is complete, because I'm still adding in more notes, you get. So as soon as the program is done, the PDF will be ready. But each day I'm adding on like more notes, more explanations. And I'm also trying to go back into the charts and screenshot the trades maybe in the history that I took and then putting them there for more explanations. But these are the same things here we are trying to explain. But don't worry about it. The PDF will be ready. You get? Yeah. So we continue, but you can see that a swing low now tapped into what? That is a high key signature that price is going to shoot up. And what do you want to see? To see price remain in such levels. Where would you place your stop loss? Below this candle, the second candle that formulated the fair value gap here, below here. If you see that there is another fair value gap like this, you can put it here, but this will be high risk now. We will see that. Like if you're to lose, you'll be losing a lot, but the stop loss will be here. Will be below the middle candle that formulated the fair value gap, that candle, and then you put your TP up there. But you put your TP according to the history. You go back in time here, this side, and you see, unless price is making a new high or something like that. Okay, so we've seen a swing high, swing low, volume imbalances, and how to mitigate them, how to make them make sense, and how to use the premium and discount levels, these ones. All right. So people were about to close today's presentation. So that is the swing low and swing high. Just know a swing low is a candle in the middle. When price maybe was going down, was making a lower low, higher high, there is a candle in between three candles that was slightly lower than the two candles on the left and on the right. So that candle in the middle, we call it a swing low. If price has been going upwards and it's making higher highs, the candle that made a higher high, we need to look at it and look and refer to the candle on the left side of that candle and on the right hand side of that candle. If those candles are slightly lower than the candle in the middle, we call that candle a swing high. So we label it. How do we label that candle? We mark it out. Let me switch back to trading view. We mark it like so. So we see that swing and we mark it. For example, here, you see this candle. So that my chart is also covered with a lot of mess. You see this candle in the middle, this one, it's a swing low. Why? Because when we look at the candle on the left, it's slightly lower than it. It's weak. And also the candle on the right hand side, it's also lower than its wick. So that candle in the middle qualifies to be called a swing low. This candle here, that one, you get. So we mark all that range from its high to its low point. How? We bring our box and mark it the way you mark fair value gaps, and then we pull that to the side. So what do we expect is price to come back and revisit such what? They work just like fair value gaps, just no we'll see immediate after looking at other blocks. And we see why these candles are what? These swing lows, swing highs are really key. And if Cypher is around now, you can see the structure here of the moment they break such candle, and then on the left, when you look on the left, there is some gaps or some other key PDRAs. You just press your entry here for sales and you target these lower lows as TP. Okay. Lastly, I think tomorrow let's begin from here. It's really late. We'll begin from AMD. So I'll thank you for attending. Yes, there's someone who has a question. Yes, Fuzzy. You raised up your hand. Yes? So at this juncture, I will ask someone to give us a closing prayer. I'm going to upload this. Unfortunately, today I came in a little bit late, so apologies about that. But I think whatever I've touched, it has helped someone. Maybe it has helped you see something. Maybe if you knew about fair value gaps and maybe you've been knowing fair value gaps, but maybe you didn't know to use the quadrants of those gaps, maybe now you know, and how candles can be also divided into those quadrants as we've seen. So I hope that knowledge you're keeping it somewhere, because we're going to refer to these key signatures next week as we look at how shifts happen, the shifts that you know, and how to look for these things in the what, where to put an entry out, like things like that, and how to place our stop loss. As is saying, yeah, thank you very much. So anyone to say the closing prayer, and then we close it off, because it's really late. It's getting to 10. It's already 8:30. 1 minute for 9:30. So anyone with a question, a concern, or a closing prayer, or I call someone. Ivan, you can lead us through the closing word. First is raising up the hand. Or I don't know. The great works I'm appreciating for everything here from today onwards. It's commitment. Thank you, Father. Thank you so. Okay, so I think that's all for today. We're waiting for Puris to say Ivan or Kise to say the closing prayer, then we'll call it off.
Okay, let's pray.
Yeah.
Father, we thank you for today. We thank you for this moment. We thank you for the lecture. We thank you for each and every individual that has attended today. We thank you, Almighty Sovereign Lord, for even the people that have been teaching us today. Father, we thank you for your guidance. We thank you for your love. We thank you for your direction where we err. We thank you for your instructions in the places, Almighty Sovereign Lord, where we don't see what we are supposed to head to. Father, we pray that even tomorrow as we come for these instructions, that may your hand still, Almighty Sovereign Lord, give us that direction and instruct us, Almighty Sovereign Lord, to be broken enough in our hearts to understand each and everything, Father, that you want us to learn from this. And we pray, Heavenly Father, that the end of all this will be profiting to all. I thank you, Heavenly Father, that even this night as we are going to sleep, you're going to protect each and every one of us, that we meet tomorrow again when we are healthy and strong. In Jesus' mighty name I pray and believe.
Amen. Thank you very much. That was a wonderful prayer. Thank you very much. The King is also giving you claps. So thank you very much, people. Now, the other task is up to you now. Go back into the chats. Try to look up these things. Try to mark them. I hope you know how to use TradingView. You can be using TradingView, or some people are using which other platform? MetaTrader. Others are using CTrader. So go back into the charts, try to look at those candles, try to look at the higher highs, lower lows, etc. Try to locate these things on your own, by yourself. You get. Yeah, that is the assignment for today, Asega. Go back, try to look for the swing highs, swing lows, mark them with boxes, take screenshots, save them into your phone. You can share with me on WhatsApp or Alvin or Saifa also. So you share, maybe you can even put it in the group. We'll see it and we'll try to talk to you back, to give you feedback. Mark the fair value gaps into 2 sections and see how price reacted to those gaps. You go back in time. If you ever taken trades and you took screenshots, go back to those screenshots. Try to look at those gaps and see. You get. Look at those gaps and see how